Guys, welcome. It's Sunday, July 25th. My name is Dave Coker. This is Talking About Finance. And you know the routine. We talk about a bunch of things, right? Now, a couple of students contacted me and they're enjoying the presentations. Thanks so much for the email. I appreciated it. They want me to look at the markets like we do in class. So I thought what we would do is we'd present this slide. And I typically do these in class, and I know most of you or many of you have never been in one of my classes. We talk about the markets a lot. And we'll just do this. This is from the wonderful FinViz. It's a heat map. So we'll present it every week. I'm going to look at it here year to date. And unless something odd's going on, we won't spend a lot of time. But well, there is something odd going on. Take a look at Google. Take a look at Microsoft. Even Apple. These gains are huge, guys. And keep in mind the long-run rate of return of the U.S. stock market is roughly 7% over a sufficiently long horizon. This is epic. And the question is, we're not really sure how long it's going to be able to continue for and how sustainable it is. It's very fascinating. And a lot of the reason gets down to this, right? Now, what we've got here is we've got federal debt held by the public, right? It's a very fascinating chart. We've seen variations of this on social media and real media. And we can see that now debt is slightly above levels last seen at the end of World War II. Now, the thing you should look at this, guys, when you take a look at World War I, take a look at World War II, these events when debt ran up for different reasons than we've got now, what happened was they paid it off relatively quickly. And how did they do that? Well, that was the era of 90% nominal income tax rates, and many people are calling for them now. Well, I never really argue with people on social media. I might think they're an idiot just for calling for it, because what they don't understand is back then, the federal tax code was much simpler. And yeah, everybody paid federal tax back then, almost everybody. It's not the garbage we got now, where a relatively small number of Americans pay federal taxes. So all you got to say to these people who are calling for these sky-high interest rates, or pardon me, tax rates, yeah, be careful what you wish for. Everyone's got to pay their fair share. So if we're going to be committed post-pandemic to paying down the debt, rather than seeing our national debt double by 2050, then yeah, you're going to be paying federal income tax as well. Everybody will be paying federal income tax. So let's just declare a truce to all this. Maybe instead of being jealous of other people's success, maybe you should focus on improving your skills and getting an education. And that way you could actually make more money yourself. It's a really interesting thing. Now, a lot of people say this isn't a problem, even if we don't raise interest rates, because we can just sell the debt. We continue to sell the debt. Well, something very subtle and interesting has been going on, guys. It isn't a problem yet. Who's going to buy it all? Now, a lot of times people say, oh, foreigners, Well, what we've got here, and this is off, I'm not sure, Alhambra, I can't remember which of my friends gave it to me. I could ask her. But regardless, guys, what we've got is we've got treasuries. We're looking at buying and selling, and clearly you know how to read this. Above the line means people are buying treasuries. Below the line means people that are selling treasuries. And on the right-hand side of the chart, you'll notice there's a lot more selling going on than in the past. Check this out. You look down from 98 up to 2007, there was month after month when there was no selling. It was like the most amazing thing ever. People just kept buying. And then we saw with the global financial crisis, sporadic selling. And since 2015, it's really been accelerating. So you got to wonder why foreigners, not to be nasty, but entities outside the United States will continue to lend America money simply so the nation can live above its means and perhaps far above its means. And then what do they do for the world? Periodically, they deliver democracy, to a Middle Eastern nation, typically, things like that. My guess is they're not going to be lending money that much longer. We're starting to see flows, capital flows going into Europe and other areas of the world. There's just too many other places to invest rather than the United States. And when you think about this, what's going on with this money that they're borrowing? Well, one thing they're doing in the short term is they're trying to stimulate economic growth. And here, this is a wonderful chart. We've got growth 2021 year on year growth or change in GDP by country. US coming in at 2.3 times 2020 GDP, China at 1.6. But look at Northern Europe. My gosh, what a powerhouse. Absolutely incredible. Norway. Netherlands not doing that bad themselves, but it's really fascinating, guys. And what I'd like to see is I'd like to see somebody take this data and try to get an idea about national debt and see if we are buying growth. I don't think we are, at least not sustainable growth. It's really interesting. And the money that they're printing is ending up in all sorts of odd places. Check this out. Look at homes in the States. This is existing home sales, the median price. We're not looking at average here, because you know averages can be distorted. We're looking at the median. And guys, the median home price in the States right now is a record high, 363,000. Check this out. Up some 23% in 1 year. Is that sustainable? No, no, no. Look for prices to fall back to earth. It's the same thing, if it's any consolation, guys, is going on in the UK and Australia, where I've got properties as well. And I'm actually going to sell London properties. The money's just too good. And there's people out there waving a handful of pounds all around. Yeah, we're going to see a property crash in the UK. It's going to happen in the States as well. Just these gains are not sustainable over time. There's an old Wall Street expression that comes to mind. If it goes up like a rocket, it can fall like a brick. And yeah, we will likely see it falling like a brick. And this, keep in mind, these huge run-ups drive inflation. Of course, you wouldn't know it from the official statistics. And we've talked about inflation before. And I shared, guys, that I don't believe the official numbers in the UK. I create a spreadsheet every month, track outgoings, and most importantly, I can look back monthly, I can look back yearly, and I can actually calculate an inflation rate, a personal inflation rate. And I would invite you guys to do this as well. Don't listen to what the government's telling you, because they've got a moral hazard. They are judged on inflation results, and they will never tell you exactly what it is. They'll find a way to downgrade the numbers, right? Check this out. This is interesting. So, oh yeah, and just to close that thought off, in the UK, we've got the official numbers. I'll tell you what my personal rate of inflation is. It's running closer to 11% than it is the government's estimate. Now, in the US, we've got US CPI. It's called Owner's Equivalent Rent of Primary Residence. And the idea there, the justification or the representation they make, is that they're going to tell you the inflation for property based upon what the owner could rent it for. And they've got it in at 169 and change. Well, it turns out, guys, again, taking a look at the median, the U.S. median asking rent is $252. Now that's that's about a 50% difference. You got to wonder, what are they doing this for? Why are they doing it? Now, a guy called Wenger did this, and I don't know the gentleman. It's good work. Just me and my buddies, passing these things along. And I saw the email, it came out, and the research note came out, and guy asks, is there anything that doesn't feel understated in official CPI calculations? Yeah, they definitely are lying, and that's a very, very bad habit. And I'm using that word intentionally, lying, distorting, whatever you want to call it. The official inflation rates, they bear very little resemblance with reality, at least in my view. In the UK, and I've heard from people in the States, it's pretty much the same there. So they really gotta get off this lying and distorting and damaging their credibility. And salvation is out there, guys. We can't coerce them to stop distorting the figures, but we can actually save ourselves, save our own wealth. And I shared with you, I was back on the Bitcoin. Yeah, I'm back in that habit again, right? And I'm buying Bitcoin every week. I typically buy it Fridays now. But here's something else that just happened over the past couple weeks. Remember, I built up a large position in gold, and in silver as well, in March of 2019. Had a bunch of liquidity. And it's in my retirement account, no less. That's how much I believe in it. So I've got a huge position, and it's roughly 60%. Now, what I've done over the past couple weeks, I've been buying gold again. And not huge amounts like my initial position in March 2019, only 4 or 5 ounces. I'd have to look at the actual transactions. I'm using dividend income. So as the dividends come in, I just buy some gold. And I think the economic situation is very, very concerning. We're all looking for some type of safety or salvation. They're not going to tell us the truth about inflation or about other things. It's always going to be distorted. I know gold is a reliable store of value. And as I shared with you guys many weeks ago, when I did a similar trade back in 2007, or probably back in 2004, 2005, then we had the global financial crisis kicking off in '07. At the end of all that, when I sold all my gold and silver by 2014, I bought 4 houses, paid cash. I hate debt, by the way, is We've mentioned about this before. But yeah, so you got to find your own salvation. I think bullion is a good one. And as I said, guys, I'm so convinced that I've got well over 60% of my retirement money, at least my IRA in the States, invested in bullion between gold and silver. And the rest is in dividend producing shares, right? So we're all investing for the future. One thing that you got to be very careful about, guys, and I don't want this to be taken the wrong way. I have, and I've spoken many, many times. I have massive respect for China, the nation. I think we're doing a great disservice by demonizing China, the nation, as well as the Chinese people on many dimensions. It's what America's doing now because America's being left in the dust by China. Now, you really should invest in only stuff you know. It's not a knock at China or the Chinese people. Please don't take it that way. We have to understand, and you know, I've done business in 28 nations, lived in 5. It's a different nation, different rules, different regulations, different culture. So a lot of people were pushing money into Chinese equities. I have been very dubious about that. I just don't like the idea of pushing money into an area where I don't fully understand the regulatory umbrella. And there were some regulatory actions taken there a couple of weeks ago. Oh my gosh! And look at this burn off here. These stocks collectively were worth about 207 billion on Thursday of last week. And on Friday, they were worth 126 billion. It was an epic burn off. It's really good. I just like to see huge movements like that. It's wonderful. Now, listen, if you were in these stocks, I'm not making fun of you. I've lost lots of money. I think I mentioned this before. In the Corona crash, when it first happened, I lost $142,000. So don't worry about it. Treat it like I did the Corona crash as a learning experience. I learned my lesson. I know now what I did wrong there, and we'll talk about some other time. So use it as a learning experience and just continue to build your wealth. You have to continue to invest, continue to do things in the market. And maybe not in a far-flung market like this. You might want to stick closer to home. There are some very, very good stocks in the States that are sensibly priced, but you need to build your wealth. And there's one really simple reason why. Now, you know that expression, money can't make you happy? I've never believed it. I'm a very happy guy, right? I've never believed it. Look at it this way, guys. I've got several sources of passive income, as I shared with you guys. I've got the portfolio that generates dividends. I've got a property business. Now that is mostly passive because of the way I structure it. I've got some IP that I've licensed. I've got royalties coming in. And net, guys, after taxes, it's far more than we need to live on. Now, lots of problems when you have passive income streams. Lots of problems disappear. And what I mean by that is it removes a whole level of stress. Because if you don't have to work, if your boss is treating you like a jerk or acting like an idiot, you could just quit. You don't have that flexibility if you're working to make money to live on. You just don't. So Killingsworth, and I'll drop a link in the comments, Killingsworth found that both satisfaction and well-being continued to improve way past $75,000, right? People are just happier. They feel better about themselves, right? And this kind of contradicts the often heard view that income above a certain level doesn't make you happier. Well, my wife tells me I laugh all the time. You guys hear me laughing all the time. Yeah, it does. It definitely does. So that's why you have to invest for the future. If you did lose money in China, I'm so sorry about it, but you stick closer to home next time with stuff you fully understand. Continue to build your wealth, and you'll do well. All right, guys, that's it for this week. Now, next week looks like we saw record closes on most of the indices. I think only the Russell 2000 didn't hit a record high. Certainly Dow did, S&P 500 did, NASDAQ did. So it's going to continue likely. Might be a little bit of a speed bump there. Don't worry about it. I bought heavily in the dip. Hopefully you guys did as well. And we're all going to make money. Just make sure you do sensible things. You diversify. You might need some commodities. Definitely Bitcoin's good for other reasons. And you just knew we were going to talk about Bitcoin, didn't you? Yeah. But aside from that, buy stocks whose business you understand. If you can't understand how they make money, do not go near that stock. No. And you need to be able to explain how they make the money very simply. So it's going to be a good week. You're going to make buckets of money. Just get in there, take your lumps, you lose a little, you learn from it, and you move forward. All right, guys, have a wonderful week. I don't know if you can hear the thunderstorms. We're getting pounded on here in London, but In any case, guys, take care.